Yo, what is up, guys? It's BGFX. Welcome back to the channel. I'm coming at y'all with a brand new video, and in today's video I'm gonna be talking a little bit about some trades that I actually took here throughout this first week of February, right? So if you guys checked out my previous video, I talked a little bit about how it's kind of normal that typically when you transition into a new trading year, that first month of the year, right, January tends to kind of show a little bit of weird movement, right? It tends to change up a little bit, and that's kind of due to the lack of volume in the markets, and sometimes just like seasonal tendencies. Pairs tend to move a little bit different, man. But it seems that we are back to normal. It was a solid week this week. We did have NFP, and we also had somewhat of some GBP news, right? We had the interest rate decision that caused price to really just fly to the upside at the end of this week. But we're gonna go through it. I'm gonna take you guys through the trade. It was a 1 to 10.5 risk to reward ratio setup that actually was called as a signal. Took it myself, and overall it was a very clean trade setup. So really quick, just to give y'all an overview of GJ, if we go up to the weekly real quick, you can see that we did have somewhat of weekly supply here, and the last time we tested this weekly supply before this rally up was the 31st of August, right? So August 31st, 2020, we came up into this level, and we actually showed a reaction for nearly 1,000 pips. So you could have looked for shorts in the zone, but kind of what we see happening is that the market kind of pushed up, and it is showing a lot of bullish pressure. Now, this isn't extremely high volume bullish pressure. It isn't like we have huge bullish candles like this, which are easily 500, 600 pips in like 1 week. It's more of just kind of like small bullish candles, small pullbacks, small bullish candles, small pullbacks, and it's kind of like slowly pushing to the upside. So what that's telling me is that potentially this supply was getting very weak. So what I did throughout the midst of this movement here was I actually took a few long positions, but I pretty much covered these trades in other videos. But just to give a quick recap, I took longs right in this area, I took longs in this area. Market did pick up on liquidity here, ran through these highs. I was looking for shorts here, and from that point, I think that's pretty much it. I scaled in a couple of entries with a trend, and then from there I've kind of just been watching and waiting for the best opportunity. And just to take it back really quick, these were the longs that I was talking about, right? But I pretty much made a video covering all of this for you guys. But back to what we have going on here, right? If we go up to the hourly time frame really quick, you can see that the market made its high on the 1st of February, right at 3 in the morning. Okay, right there at 3 in the morning. If we go to sessions, right at London Open, the market made its high. So from that point, we actually created a breakup structure, right? Very simple. We created these equal lows here. We broke through the equal lows. Okay, keep that in mind. We kind of pushed through the equal lows, gave a decent move to the downside, nothing crazy. And what I did was actually boxed off this candle here to act as a potential area of supply. And if we look at the hourly candle, you can see that we did kind of reject off of this level, but it was nothing crazy, right? It wasn't like we rejected to this level when we came back to the upside. So I was looking for longs following through with the trend. And the reason for this, right, is that we had major moves to the upside. Now, you would think that it'd be a good time to sell, right? There's a certain thing about like human psychology and the way we think. We think that just because price is at a higher area, just because price is getting quoted at a higher price, we think it's more possible that price is going to come down. But you'll notice that sometimes, even though something looks very overextended, it'll continuously go up and it'll continuously move up, because surprisingly, retail sentiment is mostly to go short when price is at a higher area, because it kind of gives you this feeling that you're getting in at a discounted price, when in reality the market is just very bullish. Now, I know that's kind of contradicting what I've said in older videos. If you follow me for a minute, you know I've talked about like markets potentially being overextended and stuff like that, but that goes back to me talking about the weekly time frame. If we look at the weekly, you can see that we had the supply, but the bullish candles are slowly kind of overcoming it. So that kind of gives you a bias that you don't really want to go against it. Okay, it's different if I'm at the weekly and I'm selling here, okay, because that's the first touch of the supply. It's completely different where you could just see that like nothing's stopping it. We have little corrections, and the market's just pretty much continuing to the upside. So from that point, I did have like a bias to long, but I can notice that we did have somewhat of some bearish order flow coming in here on GBPJPY, right? So just to map out a couple of zones I was watching, something like this happened, like I said, markets took out these lows, which kind of did show me that was substantial possible bullish pressure. And from this area, right, we created these equal lows in the markets, right? We created these equal lows. So obviously we got equal lows. That does give us a sign that there's going to be liquidity below here, and the markets could potentially try to make a run on this liquidity, and then from that point maybe buy back up. But once again, that's all dependent on the long-term trend, because we did have NFP, we did have interest rate decisions. So beforehand, we don't know if the market's going to run liquidity and then come back up. It might run liquidity and then go back to the downside, fill different areas of price, fill different inefficiencies, right, depending on what things were looking like. But all I know is that before this liquidity was taken, I could have been looking for shorts to catch this move and then kind of get out of my position from that point, because I know that once the market runs liquidity, it's either going to decide to continuously move in that direction, or it's going to make an aggressive move back in the opposite direction. And in this case, being we had bearish order flow, we did have a lot of retail orders coming in, because like I said, retail sentiment was the short. So once, you know, the market finally gives retailers what they're looking for, that's orders coming in constantly. So once that interest rate decision came through, we ended up pushing all the way back into new highs, and at that weekly high, which was made at London Open, right? So to go down to the 1 minute time frame, I'm going to show you guys my entry real quick. And I was actually looking to short. Okay, I was looking to short to target liquidity back below this level, and maybe just potentially target like this little consolidation here, or really anywhere around here is kind of what made the most sense to me. So we're gonna go up into the Telegram really quick, and I'm going to show you guys what my entry was, right? So this is my markup before. 5 minute point of interest, just looking for a pullback to price. And you can see I put selling GBPJPY. Entry was at 143.494. Stop loss was at 143.554. So I'm going to bring that up in my charts. 143.494. Right? We're going to go down to the 1 minute actually. 143.494. Stop loss was 6 pips, and then I believe my take profit was like 60 something pips. Yeah, 62 pips. So I'm gonna bring that all the way down to here for 62, and that would give me a 1 to 10.35 risk reward. I believe my risk reward was like a 1 to 10.40 something, or something like that, 1 to 10.40 something. So you can see that for the most part, this was a decent move I was looking to catch. Now, I actually did not hold my position all the way through this. Now, I'm going to show y'all why in a little minute. But if we go back up in here really quick, looking for price to sweep lows before potentially setting up for buys again, which is exactly what happened here for us. So I'm going to go ahead and press play, and I'm going to let price do its thing. And this was a 1 to 10. Okay, so from this point, once we take out these lows, I do move my stops to break even. Okay, I went ahead and moved my stops to break even. This is another thing you want to look for. Something like this potentially happening, right? Once you move stops to break even, sometimes the markets will try to run price back up to your entry. But in this case, it actually did not take me out at break even. It got very close to it, and then we ended up dropping right back off. And I think the reason for that is because if you look here, you can see that we did have a little bit of candle movement. You can see our price kind of was wicking up and was showing us another strong level. So this is something I talked about in a previous video, how if you get in, if you know when to get in at certain times, like price will create a level of demand around your entry. Okay, so that way this, or in this case it's supply, but price will create a level of supply around your entry, so it'll kind of seal your entry off. Like price will try to come back up, but it's already around a potential level of demand, so it'll continue back down. But from this point, right, I'm in my entry, I'm letting the trade do its thing, and I'm pretty much already risk free, and I'm looking for price to kind of continue back to the downside. So to go back here to the 3 minute time frame really quick, this was my initial point of interest. Okay, and I'm gonna go ahead and put some, I'm gonna fill this back in as my zone really quick for y'all. Right, here we go. Let's make this a little bit lighter. So yeah, this was my initial point of interest, and usually what I'll do is I'll just drop this little icon here, and essentially what I was looking to see the market do was go ahead and take out this previous high that was made at the retest before the push down. right? So you see how we kind of made a retest to this zone before price pushed back to the downside to create these equal levels. What I want to see price do was create the significant level, push down, retest, you know, somehow make some type of interesting structure and break this previous high here. And then from that point, that is where my short entry was. Okay, and then I was looking for price to run back below these equal highs. So that's kind of what my structure was looking like. Okay, and then from that point, I'm gonna go ahead and press play some more for you guys, but I want to make sure if there's anything else I was looking at. So another thing, right, London Open, we did have this run, right, major bullish run right above these previous highs, maybe grabbing some liquidity on that as well. And also that spike took out these equal highs as well, which kind of showed me, right, that if the market wanted to take out these equal highs, and it kind of gave us that aggressive move for London Open, it was possible that once we kind of had some clean price action, we could have caught that move back to the downside, right? So I'm gonna press play again, and we're gonna let this market pretty much do its thing. So consolidating a little bit, pushing down some more, and kind of reacting a little bit of consolidation. And at this point, it's like what time is it right here? That's like around 4:40. But what I actually did, right, is I closed my position a little bit before 4. I think somewhere around these lows, like a 1 to 5 risk to reward. And that's pretty much because I didn't really want to deal with the swap fee. Let this hit take profit real quick, and it should hit take profit soon. Okay, there we go. So final targets are now hit for a 1 to 10. Now, like I said, I closed about halfway through this. The reason being is because I didn't want to have to pay that swap fee and then have to go all the way through Asia session, because sometimes Asia does like to give you a little bit of consolidation. It's kind of known as a trap session when you have a lot of indecision in the markets, and I'd rather just take my profits and kind of just go from there. So you can see how, like, once Asia opened up, once that transition happened, you kind of began to consolidate a little bit. So I didn't really want to deal with something like this potentially happening before the move back to the downside. So I went ahead and just secured my profits at a 1 to 5, and then allowed the market to kind of clear up liquidity to the downside. So if we go back to the VIP really quick, I posted my entry here at 10:40 a.m. right, entry right there, and then boom, from there we react a little bit, then we react even more, and then we drop all the way back to the downside, right? So very minimal drawdown, looking for a very large move, right? Focusing on precision, focusing on risk to reward, and allowing each trade to play out, right? So stops a road to break even. Strong bearish pressure coming in, still holding in profits. Occasionally you will see GJ have post New York session volume. Be mindful that we have the daily swap fee coming in about 4 hours. If you would like, you can take profits or continue to hold. I'm gonna keep holding risk free, and then of course that's the picture I just showed y'all. Secure partials if you're comfortable, and this is kind of like halfway through the trade. Just to give a little more in-depth analysis, we had this break and retest here, right? Essentially picking up sell orders to the downside, running through all those sell orders, picking up buy orders around these highs, pulling back, creating an initial point of interest. Price shows reaction to this demand zone, giving the retest to pick up sellers, coming back down to here, creating another form of interest, which will give us liquidity to the downside, and then we run those previous highs into the point of interest. We got the break of structure, we got the pullback. That's when I entered. So I wanted to be very patient about this one. I wanted a lot of confirmation because, like I said, GJ has been very bullish. I did not want to get caught up in that entire upside movement that has been going on for a minute. But it's all about timing, right? You can trend trade, you can counter trend trade, but we can see that this week we did kind of initiate a lot of selling, and then once that interest rate decision came up, we literally ran right through it. So I'm gonna show you guys the interest rate in a second here, but then of course this is final around a 1 to 10. I got out around a 1 to 5. Prices reached final targets. Going to be watching for potential longs tonight. Okay, so that was right here when I posted it, and I said I was looking for potential longs. Okay, and that was when we had the interest rate decision. So if we look at what happened here, you can see that from this point we're kind of setting up, giving us some decent price action. Then we had that major push to the upside. Now for me, I really did not want to trade this for the high impact news, because if we go up to the 30-minute, you could see where we were, right? We were moving to the downside. We caught the sells, right? We caught the sells, you know, pretty nice, zero drawdown all the way down through, but you can see that we were retesting this level. So for me, it was kind of somewhat of a guessing game, because of course we did have sellers coming in all week, right? We have liquidity, we have sell orders that potentially can be ran through depending on what the news was potentially going to give us. And then also we have a perfect retest that could be picking up buyers, so it could be running past buyers as well. So for me, I really didn't want to enter it. I'm not really disappointed, even though I was looking at long more than I wanted to short it. But essentially you can see that this was a very clean move. Then all of a sudden, that's the high impact news running right through, and then we clear up all these highs. And then that's another thing, right? Once price makes these highs, a lot of people like to think, okay, price at a higher point, I'm kind of getting discounted, it might pull back. Okay, most often when you see something like this happen, it likes to continue up a lot. Okay, and then it'll finally give you that opportunity to sell after a lot of liquidity is exchanged and a lot of stuff starts to happen in the markets, right? And I'll try to show y'all another example of this really quick. Same thing right here. Okay, market comes up, and instead of like reversing at a higher price, it pretty much just retests and continues up. So sometimes breaking retest does work. You know, I feel like there's a time and place for everything. It's just all about understanding kind of like true price action, who's making money, where their orders reside, retail sentiment, understanding like just psychology of the way traders think, and then at like the same time just sticking to your plan, you know, whatever strategy you trade, because at the same time we had equal lows here as well, which potentially could have got ran as liquidity too. So it's really just like viewing the market from multiple points of view, and trading what you see as probabilities, right? So yeah, that's pretty much it, and we run out from there. So that is pretty much it for this video, guys. This was a fairly quick video, but yeah, just to give a quick recap, here's the sell. If we go back to the Instagram really quick, I'll show y'all. This is before, this is after. This was the entry, this was the signal, this was a little bit more into it, and then that's final targets being hit. 6 pip risk, 62 pip reward. Personally got out this setup at like a 1 to 5. Been focusing on precision over everything, because at the end of the day, if you can get to the point in this craft where you reach 1 to 5 or 1 to 10s consistently, like every few attempts, then your losses basically become like obsolete, and they'll get covered by your accuracy. And I feel like that's very true, because like if you just get to the point where you focused on almost pure precision in your trading, and you're getting like 1 to 7s, 1 to 10s, even 1 to 15s, maybe 1 to 20s. Okay, me personally, I don't really go for 1 to 20s that often. Like 1 to 5 to 1 to 10 is kind of like my favorite kind of way of looking at it, because I can give my stops a little bit breathing room, but then I could also like reach a 1 to 10 within like a day trade, like an intraday timing. But yeah, this was the trade that I took for 1 to 10. Trades covered in the previous videos like a 1 to 5 right here. I think it's like a 1 to 6, but then tapped out at break even, partials taken. And then this was like a while back, 3 pip risk, 14 pip reward. And this is just a beautiful entry. This one was like on the pip right here. So another thing you got to be careful of is like if you're using limit orders and your entry is like too good, like if your entry's too good on price, then what it'll do is it'll kind of fail to activate your limit, and it'll have to push down a little bit more because of the spread. So that's another thing you got to be careful of. But just looking at like previous entries like this is like what I mean, right? So in this case, I had a trade that was running like 14 times my risk. If I was to close at 14 times, which I didn't close at 14, I ended up closing at like 12 times my risk, I believe like 11 or 12. But essentially, I would have to lose like 10 trades in a row, or 10 or 11, depending on like broker fees and stuff like that. I would have to lose that many trades in a row to be back in drawdown, right? Considering like I'm already in profits at this point. If I have a 1 to 10, I would have to lose so many trades in a row to be back in the negatives. In this case, I had a 1 to 5. I have to lose 5 trades in a row to go back into the negatives. In this case, I have a 1 to 11.7, and I would have to lose 11 trades in a row, right? So it's simple numbers, but that's kind of why I like to focus on risk to reward over everything, because my win rate would have to be like 5% for me to be losing for the long term. So when I said like January was a losing month, I didn't mean long term, right? Because it would take me, I don't even think I had 11 losses since I posted this. Yeah, December 11th, I haven't had 11 losses as a whole since then. So for the most part, it's just all about like sticking to your plan and understanding like these type of setups occur, but it's all about like training your eyes to see it, spending time on the charts, and that's pretty much everything. So yeah, man, I hope y'all enjoyed this video. I will catch y'all in the next one. It's been BGFX, just taking y'all through trade I took this week, very clean trade. I also have one more thing. I'm not gonna leave this part out, right? So let's see, where is it? I took buys too. I took buys too on GJ. That went, yeah, these right here. I took buys for GJ that went a little bit in the profit, broke out these highs, and right before I was about to say go ahead and move your stocks to break even, it started coming down a little bit more, and I felt that we did have a little more upside room to push. But this came right back to entry price, right, and pretty much didn't play out, and it's kind of what my markup was looking like. So I want to see price kind of run with like a W formation all the way up into the highs. But that's pretty much what it's all about. You know, if you're wrong, if your bias isn't correct, you just reflect, and you just get back into the markets with a level hedge, you know. So I think my entry was right about here. Stop loss was somewhere around in this area, I believe, and then my take profit was like, I believe, potentially like somewhere up here. And I was looking to see price run back into these highs, which is actually what happened at the end of the week. So I timed it a little bit early, but instead of me being like, oh, I was going for longs, now it's just going to trend down, I'm going to miss the move. Instead of doing that, I went for longs. I understood it wasn't the time for longs. I see my setup taking place in the other direction, and I executed on it. So that's what it's all about. Not like living and dying by each trade, understanding that like another trade is going to come. You're always going to have more opportunities, and that's just what the markets are, like an abundance of opportunities for you to get into. And as long as you're patient, as long as you're executing on a plan, you know the ins and outs of the way you trade and kind of where your edge comes in, then that's everything, right? Psychology is plays such a huge role as well. So yeah, I'm not gonna make this video too much longer, man. I hope y'all enjoyed. I hope you guys all enjoy your weekend. February is gonna be a great trading month, man. It's been your boy BGFX. I'm out. Salute.